What's up, YouTube? Tim Layton here, and welcome back to my YouTube channel. If you're new here, thank you for coming to my YouTube channel. It means a lot. So today's going to be a little bit different. I had no idea I was going to make this video until I was talking to one of my friends about the current option positions that we're both in, and he was freaking out because they're down some money right now. He was losing it, saying his whole life was done. It was wrecked. And I was starting to freak out a little too because I was down a lot of money. Luckily, it's starting to come back. But still, the sentiment remains the same. We were freaking out. So I just had the idea pop into my head that a lot of people have probably been through the same thing that me and my friend were going through. And there are clear and easy steps to avoid doing what we were doing. So today's video is going to be about coping with your losses in the stock market. Let's get into it. Alright guys, so jumping right into the tips and tricks to cope with your stock market losses. There's going to be 3 categories to this in chronological order. First things first is going to be preemptive tips. Second, we have present tips. And third, we have post. What you do before your losses, what you do currently while you're losing money, and then what you do afterwards. So, to get right into it, we're going to start with preemptive. So first things first, before you get into a trade that you could potentially lose money on, you need to do what is called your DD, or your due diligence. Now what that is your research. Simply put, you need to do extensive research into any position that you plan on entering. Now, what is research? It's different for everybody. And I'm not going to tell you how to do your research, but I will tell you some of the things that you can do. First things first, pretty good option is YouTube videos. There's a lot of creators on YouTube that post daily in-depth research on stocks that they like, stocks that they think are going to blow up. And you can use those YouTube videos to get an idea of what's going on and whether you think a stock is good to enter or not. Second is Reddit. Now Reddit's very hit or miss. You can get on Wall Street Bets, which is just a bunch of memes and jokes and stupid people saying stupid things on there, or you can find some pretty good subreddits that have very useful information. And then also you have news outlets. You have the Wall Street Journal, you have Bloomberg, you have Benzinga, I think it's called. But there's a bunch of news outlets that are strictly stock market oriented that will give updates to a lot of big stocks and stock market as a whole. Alright, and then the last thing that you can do for your due diligence is analytics. So there's a bunch of different websites that you can use. Some of them you pay for and some of them are free, but you have things like stockanalysis.com, tradingview.com, finviz.com, and these are websites that will give you the analytical breakdown of the stocks that you're interested in. Things like the earnings per share, the PE ratio, projected growth, debt to income ratio. All of these types of things you can use, and you can see if the stock is starting to move in the right direction. Now, when you do your due diligence, it's going to create a high conviction. Conviction is a firmly held belief. So if you do your due diligence and everything is looking right, you're going to have a high conviction, a firm belief that this stock is going to go upwards. And what that's going to do is if the stock temporarily comes down, it's going to ease your mind because you can think back to when you were doing your due diligence and remember why you invested in this stock and that you believe it is going up. And it'll ease your mind, ease your emotions into your losses in the future. Alright, the last preemptive strategy or tip to coping with your losses is having an exit strategy. This one is debatedly the most important one, but it is also the hardest to follow. It sounds simple on paper. Have a plan of when you want to get out, whether it's a profit or a loss. Have a specific price that you want to get out at. Sounds super easy, but I promise you, when you're in there, when you're in the zone and you're making money or you're losing money, it is very hard to call it quits. But you need to follow your strategy. So, luckily, depending on what trading app you use, Robinhood, for instance, has things like stop losses and limit orders. Stop losses will trigger a sell at a certain percentage of a loss, and you can set that at whatever. A general rule of thumb is 10%. Profit or loss, 10%, you take your cut and you leave. That's typically for regular stock trades, like swing trades. If you have a long-term stock, don't get out at 10%. It's a long-term stock. You hold that thing forever. But if you're trying to swing trade, day trade, 10% is the typical rule of thumb. 10% loss, you call it quits. 10% gain, you call it quits. For options, is a little bit harder. There's a little gray area. My strategy is 100% profit. You get out. No questions asked. And that's hard. You've just seen that you doubled your money. The momentum is still going. It's hard to get out. But you have to follow it. For instance, on my last trade, before the ones I'm currently in right now, I put in $5,000. In 2 days, I doubled it to $10,000. Called it quits, sold out, done. 2 days later, 2 days, my options were worth $28,000, meaning I missed out on $23,000 of profit because I sold out too soon. But you have to remind yourself that profit is profit. $5,000 in 2 days is huge to an average person like me, and don't beat yourself up about it. Now for the downside with options, I usually try and do 50%. And in my opinion, on the downside is the hardest to follow. Because I have these high conviction plays, these things that I truly believe are going to go up. And when an option swings down 50, 60%, you don't want to lock in those losses. That's half of your money gone. And you think it's going to go up. You might know it's going to go up, but you have to get out. For me, it's 50%. There's a lot of times I haven't got out at 50%, and then it drops to 70, 80% loss. And if I would have got out at 50%, I could have jumped back in at 80% and saved myself a 30% loss, lowered my average cost, and made way more money. But I didn't, and I regretted it. So those are the preemptive strategies and tips to dealing with your losses in the stock market. Next, I will be going over in the moment what to do to deal with your losses while they're happening. All right, I lied. There is one more tip that I forgot to mention. It is very important, so I have to throw it in here. The last tip is do not invest more than you are willing to lose. And it sounds complicated, and it also sounds kind of simple. It's a weird one, but you have to figure that out. So you need to take a step back before you enter a trade, high conviction or not. You need to take a step back and ask yourself, for a regular stock, we'll say 10%. Say you want to invest $100. You have the potential to lose $10, and you also have the potential to gain $10. Is losing $10 worth making $10 to you? If yes, step it up. Say $500 or $1,000. 10% is $100. Is potentially losing $100 going to be worth potentially making $100? If the answer is no, you can't risk losing $100, it's not worth it to make $100, step down. Do not do it. Do not invest. I've made that mistake 100 times. I'm still trying to learn it, but I promise you, you do not want to be in the position where you're losing more money than you are ready to lose. Now for options, it's a little scarier because options move so violently in one day, you can potentially lose all of your money. You can even put a stop loss in and it might not execute because it's dropping so fast. So you need to be prepared to lose all of your money. And like I said, my exit strategy is 100%. So I'm also prepared to double my money. So we'll do the same thing. $100 invested. Is losing $100 worth making $100? For me, yes, I step it up $1,000. At my current position, can I stand to lose $1,000 in the blink of an eye? Yes. Should I? Probably not. But I'm kind of desensitized to losing money, so yes, I can. Now we'll get to $10,000. Can I afford to lose $10,000 in the blink of an eye? No. Even if it means making $10,000, still no. But because I'm stupid, I did that. Right now, I just did that. I was down like $9,000 and I was freaking out, which is exactly why you need to figure out how much you're willing to lose. Figure it out. Don't go over that. If you lose it, you lose it. You were already prepared to lose it. It's okay. But do not go over that amount. All right, with that being said, we're going to get into present you are losing money, tips and tricks. All right, my first tip on what to do when you're currently losing money in a trade is to do the math. Trading apps like Robinhood don't tell you how much money you need or how much percentage you need to gain to break even. They only tell you how much you've lost. But that doesn't tell you how much you need to break even. It doesn't work that way. So I'm going to tell you the math you can do on how to figure out your percentage to break even. So this is a little complicated, but I promise it's really not that bad. So what you're going to do is you're going to take your total percentage return. If you're at a loss, it's going to be negative, but you're going to take that. So let's say you're 40% down. You're down 40%. So take that and subtract it from 100. 100 minus 40 is 60. Now what that means is you have 60% left of your initial investment. Let's say you lost $100. You lost 40%. You lost $40, which means you have $60 left, 60% of your initial investment. So what you got to do with that is put it into a fraction. 60% is 60 100ths. I don't know if I said that right, but it's 60 over 100. Now swap that. So now it's 100 over 60 and divide it. 100 divided by 60. It's going to equal 1.6666666. You subtract 1 from that, and this is where it gets a little bit confusing. You subtract 1 because the 1 is the 60 that you have. You got to take that out of the equation to see how much you need to get back up to your initial investment. So you subtract that 1 and you're left with 0.666666666, repeating. Now move that decimal over 2 to the right, maybe, I don't know, this camera's backwards, but move that decimal over 2, and then you have 66.6 repeating. That is the percentage you need to get back to your initial investment. You do that and it's going to put things into perspective. It might not ease your mind because that number might be higher than you thought it was, but it's going to put you into perspective of what needs to happen to make money. And to me, being logical and figuring it out helps me. It helps me realize what needs to happen, and it calms me down a little bit. All right, my last tip on how to cope with your loss during the loss in present time is to do more research. And this one's huge. I need you to figure out exactly why the stock is dropping, or the stock market, whatever it may be. You need to figure out exactly why it's dropping. What is going on? Now, once you figure out what is happening, you need to determine whether this is a temporary drop or a permanent or long-term drop. Is this something that just unfortunately happened and the stock market's going to react negatively for a few days? Or is this something that's going to affect the stock for a very long time? If it's short term, once you hit your exit point, like I said, options 50% down or a regular stock 10% down, get out and you can buy back in when things have settled. If it's a long-term drop, get out. You're done. Whatever you thought was going to happen didn't end up happening. That's okay. You're gone. So those are my 2 tips on how to cope with a loss during the loss. Next, we're going to be getting into after the loss, what to do. All right, so what do you do after you sustained a sizable loss in the stock market? There's not much you can do afterwards. I hate to break it to you. I do. But there's not much you can do. The money is gone. But the one thing you can do is learn from your mistakes. Sounds simple, I know, but it's really not. It's hard to learn from your mistakes. Habits die hard, but you have to learn. Whatever happened, whatever went wrong in your trade, how can you stop that from happening next time? What steps can you take to prevent it from happening again? Figure it out and don't let it happen again, or at least try not to. It'll probably happen again. But try to better prepare yourself for next time. That's all you can do afterwards. Alright guys, this video wasn't too long. I know it wasn't, but I think that's okay. I just know with everything going on in the stock market right now, rising interest rates, stocks dropping, I thought this would be a very helpful video for people who are feeling a little bit scared, a little bit vulnerable in the stock market. Try these steps, try and calm down, put your emotions to the side, let your head do the work, use your mind, use your logic, and try and get through it. I really hope some of these tips helped you out, or they help you out in the future. As always, please subscribe, please like, and please comment anything you'd like to see from my channel and anything you think that I can do better, because I'm trying to help you guys, so I want to do better. Thanks for watching my video, and I'll see you guys tomorrow.